Good evening, everyone. So today we'll be looking at how to best handle what I call FOMU. That's the fear of messing up. So what I mean by that is like you're afraid that you could lose your profit on the stock that you bought, or the profit could become a loss. That is, sometimes you're afraid of like not waiting and like not waiting to maximize your profit. That is, if you take profit now, probably the stock will continue to move up, or the profit actually become a loss. That means you lose out on all of the profit. So today we will look at the best way to handle that kind of situation. And that's like one of the situations we have this week. So we'll look at that. So, but before we look at the topic, let's quickly run through the market cycle. So the market is still overextended. That is artificial intelligence. That is companies that are involved with them. People are beginning to think that their prices are too high, and there is a likelihood that the price will continue to go down. So people are no more, at least, should we say, few people are buying the dip, or most people are no more buying the dip. That is the pullback in the market. Most people are no more buying. So people are afraid of what's going to happen. So that's like the cycle we are. So, but the shutdown still is still affecting, and we still people are still waiting on clarity on trade between US and China. So all of those still affect the market mood. And because of the shutdown too, some of the readings that people depend on to determine the cycle we have, or what's gonna happen next in the market. Some of those readings are not being released for now. So people can't really tell where we are when it comes to like the labor market or the inflation. We have idea, but it's not like as it used to be that they release those number and people can work with them. So that's where we are in the market for now. And for me, I will still stay defensive. That's it. Whatever is your own defensive measure. For me, I buy dividend paying company. Some people they do like what they call hedging. That is buy if they're going long on Facebook, they will also buy a put. But I'm not a fan of that strategy. But some people, that's the strategy they are using. All right, that's where we are in the market for now. So I don't know if there's any question or thoughts on the market cycle before we move to today's topic.
None.
Okay. All right. So looking at today's topic, we're talking about the stock that one bought. I mean, the price had gone up. So, for example, Microsoft or Amazon. Then now the question is either the price began to come down a little bit, or you are just concerned if the rally will continue? What is the best way to handle you taking profit so that your profit won't become a loss? That's the situation that one will find himself or herself sometime when it comes to dealing with the stock market. So I'm saying that if you find yourself in this dilemma, you are not alone. That it happens to everybody. Just that people that stay in the market, they have found a way to deal with it. So today we'll look at three different ways that we can deal with the fear of messing up, that is you losing your profit, the profit that you are gaining on your stock. So number one, I say you have to define your objective. That is, before one buys a stock, you need to have a plan or a goal. What do you plan to achieve by buying the stock? So what I mean by that is that you could have a longer time frame or a shorter time frame for buying the stock. So for example, if you're buying Amazon, if you believe in the company future growth, that is in the next 5, 10, 20 years, Amazon is likely to double in price. Then your objective could be that you want to hold it for as long as you can. Then in that case, if the price begin to slide, you don't have to worry about it because your objective is to hold it for the next 5, 10, or 20 years. So your concern should be where would the company be in the next 5, 10 years, not what is happening right now. So the market will continue to fluctuate, but our objective will determine how we respond. I know people react, but the best, probably better word is respond. That you are not reacting from the place of fear. You are responding from a place of understanding. That you understand how the market works, and if you have a longer time frame, you don't have to worry. You just leave it as it is. But if your time frame is shorter, that is, you have a target. That is, for me, once Amazon crosses 240, I was ready to sell last week. That is my, what's it called? My target was when the report will be good and it will cross 240. And once it did that, I started taking my profit. So in that case, I do not need to ask someone a question, should I take profit or not? I already have a shorter time frame for Amazon. That is the only, I think that's the only Max 7 that I wanted to buy in like about 3 weeks ago. But my plan I have two different ones that you want are two different brokers. So the one in Robinhood, my plan is to sell it as soon as it crosses 247. Then the other one, I was planning to hold it for, you know, let's say for a longer time. But I changed that last week. The reason being that I saw that Facebook, that's Meta, they were issuing bond like 150 billion. Then later I saw that Google were doing the same thing. So my calculation was that, or my reasoning was, these people are overextending themselves. That is, they have to be borrowing money to do the next project. That's what it means to me. That is, they borrow, they issuing bond. So mean they needed money to like take care of the next project, which is still artificial intelligence, like data center or whatever. I mean, whatever aspect of the artificial intelligence their company is dealing with. So when people began to overextend themselves, it's likely that very soon, bad news will begin to show up in the company. So my reasoning is that we've got to a place that artificial intelligence, the company are beginning to overextend themselves. So I sold, I sold the second, no, the other Amazon that I have in the other company. So that's my reasoning. That is, if these big companies, if they start issuing bonds, they are borrowing money to do the next project, then very soon they may come to a place where they overextend themselves in the area of artificial intelligence project. So then when those bad news began to come up, or when they began to have issue with the project, then the price will begin to go down. So for that reason, like Shark Tank people will say, they will say I'm out. So for that reason, I'm out too concerning Mark 7 for now. So for now, I'm no more buying any of the Mark 7. That just until condition changes. That is, if there is if I have another reason to buy them, then I will jump in. But for now, I think the company are overextending themselves in the spending when it comes to artificial intelligence. So for now, I'm no more buying any of them. All right, so number one, you should define your objective. What is as in what's your goal when you buying the company or the stock? If you are gonna hold it for a longer time, then there is no need to panic for the short time fluctuation. But if your plan is to sell, I mean, if your plan is to hold it for a shorter time frame, then if your target has reached, you could sell without asking question. If it hasn't reached, and if you are no more comfortable, you could also sell and just get out. So, all right, that's number one take there that we should define our objective. Why are you buying this? Are you buying it for a longer time frame or for a shorter time frame? So that will help us to manage the fluctuation in the market. I don't know if we have any thought or any question about that defining our objective.
No.
Okay. All right. So second point there. So the second point is what I call you should accept what it is rather than what it could have been. So when it comes to the market, you should only have this is what I did, not this is what I should have done. That is nobody gets it right all of the time. There are some investment that Warren Buffett made and they run into a loss. That is not every investment that they make that it will be profitable. So sometimes they have to accept the loss and just move on. So what I mean by that is that if you buy a stock, once it reach your target, you can take profit and just accept the profit as it is, not bothering your head with what it could have been. So I have a sample here for Amazon October 30th. So like my target is once it crosses 240, I will start selling. The reason being that that's the highest it has been. So I was thinking once it crosses it, it's likely that it's likely that it's gonna go down again back to 240. So once it crosses 240, I saw some for 243, some for 247, but I accepted it. Even though at one point it runs to 255 that same day. So I don't have to say, oh, I should have waited. No, you wouldn't, as in nobody get out at the peak all of the time. You have to accept what it is rather than say, oh, I should have waited, I should have waited. Sometimes, even if you wait too, the price could go down back to 230. So it's better for you to just stick with your original plan and accept what it is rather than what it could have been. Another example for UPS, my target is once they report, I was expecting that it's gonna be good, then it's gonna run to 95 at least, or at least, meaning minimum 95. Then my next target is 105. But as I was watching it that morning, it ran to 10, like 108 or 107. All right. So, but as in one day before the report, I started panicking. Panicking meaning as in I was not sure what's gonna happen. So I sold half of it. That is, I have like 200 shares. I sold 100 the night before they reported. So my plan was once it reaches 90, as in if it reaches 90 before the report, I will sell half. At least if the report was bad, I will be able to keep my $300. I'll be able to keep the $300 profit and I will deal with whatever happens. Then if the remaining 100 share jump to 95 or 105, I will still be all right. So, meaning the day they reported I jumped to like 105, I don't have to I don't have to start beating myself up that why did I sell at 90? I just had to accept that I was no more comfortable holding 200 shares till the till the next morning. I already have planned that if it run to 90 before the report, I would sell half of it, then wait for the remaining half to see what will happen. So that is the plan. What's it called? That's what I have in mind before it happens. So I accepted it. That is, I have the gain of $3 on the first 100. Whatever happened to the next 100, if it goes down, at least I was able to. I will be able to hold on to some gain. And if it continue to rise, I will accept it. So it rose all the way to 107. But the 107 didn't hold. That day it fell to like 99 or 98. So, but I'm just saying it's not every time that you will be able to tell 100% of what's gonna happen. But one should accept, as in you accept what it is, rather than uh what it could have been. Let me drink some water. All right, so all right, so that's an example that is like how How I went about UPS. I accepted that this 90 was good for half of it, then the other half I will accept whatever happened to them. All right. Any take on that? Mhm.
Not really. The only question is that if one is taking a stock and the stock has there's a potential to go even higher than 190, its potential.
Yes.
But the long term, that means one should just depends on your objective before you decide whether to take profit or to hold on for to continue to hold on for a longer period. Is that what I'm hearing then, or what you're saying then? Once you know your
Number
objective.
one, the first aspect, define your objective,
Okay.
meaning I wanted to hold it for a longer time or shorter. That's the first aspect. That is, before you buy, you have a plan how long you will hold it for. But the second point now is if it's for a shorter time, once you take your profit, even though it's not the maximum, you should accept it as it is, not what it could have been. That is, you didn't get out at the maximum. Accept it. That is, you will not get out at the peak all of the time. So I'm not sure if we're saying the same thing or asking.
Yes, I understand that. Yes, yes, sir. Yes.
Okay.
Yeah.
So number one point is I will define my objective. These stocks, this one are for longer time. I'm holding them for as long as they could. Then short time fluctuation will not bother me. But the one that I have planned to sell within 2 weeks or 1 month or 2 months, I'm saying for those, I will set as in whatever the target that I set is. So like for Amazon, I sold 243, 247, but it run to 255. But I shouldn't be saying, oh, if I knew, nobody knows. So I set it that profit of 243 is good enough. Profit on 247 is good enough, and as in just keep moving, just keep moving on. Without, I mean, without saying I should have, or if I knew I should have waited. That's the second point that we should, if you are planning to take profit, once you take your profit, accept what it is. Don't bother your head with what it could have been. Ah, last point here. I said we should stay the long haul. So it could be tiring, like this person is. But staying in the market as maintaining a long time view of the stock market has been proven to maximize profits. That is, if it, now I'm saying we are not this time if we are not talking about the short time view now, we are talking about you have a long time uh goal for the stock, but because of fluctuation, you are now down. I mean, okay, I think you are not sure if you should still be holding on to them. Then I'm saying maintaining a long time view of the stock market is the way to go. But when I said the stock market does not refer to one stock. We are talking about the old the general market like S&P. The reason for saying that it could it could be difficult to like pinpoint one stock that will continue to grow. But stock that have good fundamental, let's say Facebook, Amazon, Nvidia, there is a statistic that if they have been good for the past 20 years, then they are likely to be good for the next 20 years. So, meaning if you believe in Amazon, Facebook, you could be holding on to them. But this time around, I'm talking about long time view of the general market. The reason for saying general market is, let's say one buying, let's say Rivian, that is their, what's it called, EV stock. Now, there is likelihood, let's say they've been around for only 5 years. So when they opened, they did their IPO, it was around something 32 all the way to like 109. But today probably they are just under 16 or $14. Okay, so like those kind of company, I'm not saying one should continue to hold them. That is company that are just starting out, unless you have a reason for it. That's not the one that I'm saying maintain a long time view. I'm talking about the general market. That is, if it's a company that is just starting out and we don't know so much, or they've not been around for a long time, they may never return to the price, as in they may never recover the price they have been. So in that case, it may be a good idea for you to get out, accept your loss, and then move on to something else. But the general market, when I say general market, the S&P, that's the one that I'm confident in, that is in the long time, the whole general market will be profitable. All right. So I'm not sure, I mean, if you have a question or a take on that.
No, and I think I understand it.
Oh, okay. So sometimes if we buy a company, they are just they are just starting out. You don't know, we don't have a lot of details about them. If the prices started going down, then I'm not advising that you should have a long time view and just keep hold on less. I think if you know so much about the company, yeah, you could keep holding it. But I'm just saying from history or from experience, there are some companies that they will I think it's the next 20 or 10 years they won't get back to the price that they have been again. So those kind of company, I'm not advising that one should keep holding them. That is new company that just start out and the price went down. If you don't have like a personal reason for holding them, you can sell them and then move on to other things that are profitable. But the one that I believe in is the general market like S&P. So let's look at this for example. So SPY or S&P, this is April. We started trading this like 599 here. Then it went down all the way to 493. So this is the whole market that it has like the biggest 500 company. So I'm saying I believe in this, that is in the next 5, 10 years, that this is gonna be up, it's gonna, no, it's gonna keep rising. So this shouldn't bother me. If it's the OS&P that I'm holding, this move here should not bother me. I mean, from history, for the past 100 years, it has been shown that this thing will continue to rise regardless of all these fluctuations. So let's look at the monthly. If I click on the monthly, it's not gonna be showing it's not gonna show this much fluctuation. So the monthly, we can see from down here, all, there's still fluctuation, but there's no much fluctuation, but we're just saying from history for the past 100 years, at the S&P has, no, it's been rising. So there will be time that there will be some pullback, some correction like this one. But at the end of the day, that is after a long time, you will still be well off holding on to the S&P. Now we could now say what are the companies in the S&P that are very good. Then we could come to the Mark 7. They've been around for more than 20 years. So if you want to choose individual company to be holding on to, then those could be the company. So the last said, as in the last point here is that it is not every company that one could hold on to forever, but the S&P is a good option to hold on to forever. The individual company should be the one that have been around or that have been around for a while, that they are well established. Then if one don't have that, then one should go with the S&P. That's like something you're holding for a long time. All right, so any question or comment or clarification on that?
I think everything is fine. Everything is understood.
Okay. All right, so those are the 3 points I have. Number one, we should define our objective. Number two, if we are taking profit, we should accept what it is. And the number three point is that maintaining a long-term view is the best way to go when it comes to the to the general market. Okay, let me stop.